Welcome, everybody, to another episode of the AgView Pitch. Today, we are going to talk markets for this upcoming week. And we do have a shortened week. We have a 4-day week coming off of Memorial Day. And just want to tell everybody as this comes out on Monday afternoon that, happy Memorial Day. But we really want to say how much we appreciate those who have served and those who have given the ultimate sacrifice. We really appreciate that. And today we want to welcome Chad Hart. How's it going, Chad?
Oh, doing well. Hope you could say the same.
Yeah, doing good. I guess, we're heading into kind of a shortened week. And I guess with that said, we're kind of coming off of planting for most areas. It sounds like, maybe there's a 10% zone that is struggling, but a good chunk of the crop is in. And I think looks pretty good. The forecasts look all right. I mean, people are talking drought for later in the season. We'll hit on that later. But kind of what are you hearing in your world for things to kind of be thinking about in this next week as we head into this new marketing week?
Well, that's the deal. As you mentioned, the idea is that planting has gone off incredibly well this year for the most part. The Eastern Corn Belt, especially Ohio, has been under the gun as you know, they went from sort of dry at the very beginning of the year to now sort of waterlogged as we look out there. But for most of the Corn Belt, it's been nearly ideal for planting, which has put us ahead of pace for both corn and soybeans. And usually that means better than average crops when we get towards the end of the year. You think about that. Early planting allows us to get those longer season varieties out there, and that tends to translate to higher yields at the end of the year. So, supply wise, I think the market is sort of feeling that, as we, basically getting in here to the Memorial Day weekend. When we're looking at the demand side of the market, I would say it's been sort of a tale of exports currently for corn and soybeans remain fairly robust, but there's a lot of concern about, advanced sales as we look towards the 2025 crop. So that uncertainty is pulling down on us a little bit here, I think, especially as we look towards December corn and November soybean futures.
Right. We did see corn show some signs of life last week a little bit. Talk about that. What do you think drove that a little bit, and are there some signs of some life again in any of these commodities as we look ahead in the next couple of weeks? Anything that could drive anything?
Well, that's the deal. I think what you saw in the corn market, and is trying to bleed through in the other markets as well, is that, like I say, exports right now remain incredibly robust, especially for corn. We're up about 25, 26% compared to where we were at this time last year.
Hmm.
We're seeing basically still good sales as we look at this time of year. Typically, when you think of around Memorial Day weekend, we're usually about tapped out as far as making additional sales out there in the international marketplace because this is where South America tends to dominate that discussion. Yet, when we look at the data, we continue to see some fairly high profile sales that is helping boost this market along. And I think, especially early in, this past week, we saw called a lack of news when
Hmm.
it came to new additional tariffs. Now, when we got to Friday, we did see President Trump talk about the potential for more tariffs, especially on the EU. But, tariff front had been quiet. That was allowing that market to, let's call it, enjoy that strength that we've got right now in the international marketplace and try to push prices a little higher.
Hmm. I'm gonna pick on you a little bit. So, a couple or a year ago, you had made, and it's probably not picking on you because I want to hear what you have to say about this, but you had made a comment that um, watch the markets really close between Mother's Day and Father's Day, and don't miss out on any of those opportunities. Expand on that a little bit, unpack that a little bit. It's a comment I heard you say last year. Is that something that applies this year and things that we should be thinking about?
Well, I would say we still want to watch it, but, this may be one of those years where that general rule doesn't necessarily apply.
Mhm.
If you look historically, when we look at the average movements within the markets, for both corn and soybeans, we tend to see that seasonal spring high here between Mother's Day and Father's Day. And I would say that happens about two-thirds of the years that we experience when you look back
Yeah.
historically. Doesn't mean that it happens every year, but it
Yep.
is something that we can generally rely upon. And I think this year, when you look at the markets, I think there was the opportunities for it to possibly do that, but there were a couple of things that have worked against us. Uh, the big one, I would argue, would be, well, actually, I should say probably three things that worked against us. The big ones would be for corn, just the sheer thought of 95 million acres being planted was weighing down on that market as we
Or
looked
more from what
forward,
the market probably thinks.
or more. Plus, you add on that, quicker than average planting progress. Normally, we have at least a few hiccups that allow some weather premium to really build into the market. We really haven't had much of that this year. And then you throw on top like I say, the concern about the tariffs over the past couple of months. And those three news items, if you will, probably prevented um, that seasonal high from at least coming up to this point. Now, we still have sometime in June to possibly get some movement there, but right now you're just not seeing that within the markets. For example, corn over this past week, we did see a nice little run Tuesday, Wednesday, Thursday, but we took a little bit off on Friday, and you can feel the market sort of cooling their jets right now, waiting to see, okay, what do we see in terms of
Mhm.
especially emergence of the crop when we look forward to next week's crop progress report, but also, okay, are we going to see additional tariffs beyond those that have already been talked about?
Mhm. As we kind of think about the seasonals that you just kind of referenced, another consideration a lot of times is that 4th of July type weekend. 4th of July ends up, I think, this year on a Friday, so that's going to have that weekend. And then, it always seems like there's some sort of a shift in that window. It doesn't mean, back to, again, every year is not exactly the same, but, between now and then, what kind of, either technical or, just thinking of some ranges that producers might want to be thinking about. And I want to preface that by saying, looking at our average, in Profit Manager with our clients, average cost of production at expected yields. For some, that's APH. For some, it's, kind of what their target yields are. But, I think we've got an average yield in corn somewhere around 216 with a cost of production at 470, and soybeans I think that's like 64 and change with a cost of production of 1176. So, between now and say the 4th of July, if there's some windows in there, are there some targets or places where people should be maybe trying to plug some opportunities in, or do you think it's really a stretch to even get to those numbers, and probably for sure on soybeans, but
I was going to say for soybeans, that's definitely a stretch as we look right now. Because I'll play it out as I look at what the futures market is saying about season average pricing right now
hmm
for both corn and soybeans. Beans, we're talking more in the 1020, 1025 range as we look at where futures are at today. So, yeah, we would need another basically dollar and a half to get to those production costs as we look there. And that would be an incredible pull between now and the 4th of July. And it would basically have to come from a combination of, let's face it, yeah, I need a weather disaster and a strong one to help limit supplies there, but also I need a demand shock somewhere along the line to, I think, get to those levels. In the case of corn, though, we're sitting in that 450 range when you look at where futures are at right now for us, what the futures are saying about season average price. So we're only 20 cents off, and arguably, when you look back over the past couple of weeks, we've added 20 cents during that time. So I think there could still be some opportunities for corn as we look between now and the 4th of July, especially if we do have a little weather bobble here. You mentioned the idea that, what we're looking now is we're worried about drought maybe deeper into the year. But I would also argue that even as you look here in Iowa, where most of the state now is out of at least the drought designated categories, we're no longer even here in central Iowa considered an abnormally dry.
hmm
But I would argue it wouldn't take much, maybe just even a dry week to put us back into that. So most of the Western Corn Belt has just emerged from those drought conditions and could quite easily slip back into them over the next couple of weeks. And that would also, again, lead to the possibility of building a little weather premium in time for producers to take advantage of before the 4th of July.
Yeah. And, I did a podcast today earlier with our AgView team, and we were talking about like other years, and somebody brought up 2012, and we did make the comment that, I think producers were smarter than the market in 2012. We saw the drought coming about 2, 3 weeks before the market did, right? I think the farmers were smarter than the market, and the market really didn't respond until like the end of, about the first part of July before it really started responding. And then it was like every Sunday we were limit up, limit up, limit up because it was trying to catch up, right? It,
Yep.
it was, so it is possible to have those, those late summer rallies in the event that there is a sort of a major weather concern. But, those are always those who knows what could happen type of thing. Is there anything else, on the positive side, and you can hit the negative side too, but anything that are things that producers need to be watching for to move the market one way or the other? Because, realistically, we're not in this like huge range. I mean, we've kind of been in a fairly tight range relative to where we need to go to get to profit levels or where there's a ton of risk, because insurance levels is a big deal, this year with corn. Use corn as an example at 470. I mean, that's going to protect a lot of guys from a traumatic experience economically. Any comments on any of that?
Well, that's the, I think, as you mentioned, the idea is crop insurance this year, especially on corn, puts us near that break-even scenario, at least for those insured bushels. But yeah, things I'm watching, we mentioned weather already, but I'm going to continue to watch the weekly export reports
Hmm.
because as we look right now, like for example, for corn, USDA's estimate for, the 2024 crop, so this current marketing year, is 2.6 billion bushels being exported. As we sit here today at Memorial Day, the idea is we're already at 2.5. So we're only 100 million bushels off of what USDA projects, and we still have a few months to try to gather that. So I think we could see if exports continue to do what they have been doing over the past several weeks, we could see USDA have to push that export number for 2024 even higher, and that should be well, it definitely is. It's a bullish fundamental underneath the marketplace right now saying, yeah, you know what? We are well priced in the international market and we're continuing to compete, even though it's sort of our off season for exports. And that bodes well, hopefully, for carrying that momentum into this fall.
Hmm. Interesting. Um, I want to kind of shift gears a little bit to specifically the granular perspective for the farmer, what they're thinking in their individual situation. And one of the reasons I'm bringing that up, again, we had this conversation this morning with our team, and several of us had lender conversations, and lenders recognizing that there's not as much sold maybe as there has been, and then they look at the line of credit and they're like, okay, what are you going to sell corn for? 450, or are you going to sell it for $4 and your cost of production's 470? We've got a little shortage here, and we don't feel as comfortable because there's not as much sold. With that said, what percent, if the average producer, let's say, is 20-25% sold, do you feel like, if you put your farmer hat on, do you feel more comfortable as we get into midsummer to get up to that 50% sold at whatever kind of range opportunity presents itself? Or do we sit on our hands a little bit more? Or what's your thought? What having your farmer hat on, what makes you comfortable? And the same thing with soybeans, because soybeans is the really tough one, right? It's and wheat for that matter. I mean, the wheat guys are running into the same issue, even probably even more so.
Yeah, I would agree. And when we're looking here, I'm going to say, well, it's the classic, economist answer. It depends. I think a
Yeah.
lot of it does depend upon your storage capabilities there and how comfortable you are, maybe, if you will, trying to play this out for let's call it for the next 12 months.
Mm-hmm.
Do we try to get to next spring to price this crop out there? As you mentioned, like in the case of corn here, we have the advantage there at least of knowing, okay, the insured bushels are covered up to a
Mm-hmm.
fairly good level to help us meet those cash flow needs that
Right.
we might need for the lender. On the other hand, any opportunity we can grab here over the course of this year helps alleviate some of those concerns.
Mm-hmm.
On soybeans, I am more, let's call it, there's a chance when we're looking at soybeans, given the, if you will, the reduction in planting that we're seeing this spring, and given the relative tightness within the market, especially here in the U.S., that we could see better prices out in the fall, but it would mean that that crop is probably also short compared to what we've seen over the past few years.
Yeah.
So if I'm looking to bank on that, well, I can maybe see playing the beans out a little bit more, but it's the challenge of there are some years, and I think beans may be in it this year, where you're not necessarily looking for that profit, but you're looking to figure out how to minimize the loss over the course of this year because the hole's just a little bit too deep maybe for the market to really give us back that profit opportunity as we look out there.
Mm-hmm. Yeah, kind of two things you hit on there. I'll back up a little bit. Hit the first one here on basis is going to be another way to kind of manage that. And then the thing that we always look at is there is a cost of carry too. We look at the carry in the market, and it just to me doesn't look like again there's hardly enough to justify it. If a person has a line of credit and you look at where interest rates are at and the cost of carry. And then even if you have your own facilities, that cost of money starts, continues to add up, right? And so, any thoughts on basis early in the season? Do you think this might be a year that, in some of that early harvest, there could be a basis opportunity, or do you think there's too much sitting in, I don't think farmers have a lot in their hands unless you have a difference of opinion. It seems like the elevators are still sitting on a chunk though.
Oh, well, still, I think there's still some out there, but at the same time, too, I think, and especially as I look here within, say, Iowa, you know, we are still seeing relatively strong bases compared to, let's call it tradition or normal.
Right.
And we see really good demand for that corn right now. As I mentioned, the export side, but let's think about ethanol, for example. We have watched that industry basically over the last couple of years setting records in terms of the amount of corn utilized to create ethanol there. And that's helping keep those stronger than normal basis levels up across a good swath of the corn belt here. And I think it could, and I think it will keep basis stronger going into harvest until that big, first wave of the crop comes in, because we do have demands that are chewing through these crops. And
Mm-hmm.
in fact, I'll go back to USDA's projections for the 2025 demand. They're showing record demand for corn when we look out there that we will utilize nearly 15.5 billion bushels of corn, where we've never used more than 15.2 before. So that tells you USDA is expecting us to chew through a lot of corn over the next
Yeah.
18 months. That tends to be very good for higher basis levels.
Right, for sure. That's going to be interesting because it's this demand is really a key component for sure. Um, so kind of one of the last things I want to hit on, in as I said, there was a couple things. The second thing that you had kind of commented on, we were talking about soybeans and the dilemma for soybeans to kind of get to where that cost of production is, so that we can, maybe search for a profit opportunity as opposed to just mitigating loss, which right now at this point in time looks like that might be the reality. But I want to get your 2 cents, and I don't expect you to have an answer, but in the last Trump administration, we did see a market facilitation program that played out um, because of some of the things going on. Um, any thoughts on that? I mean, I don't think a farmer wants to put it in the budget, but I think on the same token, you know, does a farmer really want to get that aggressive on soybeans? Particularly if, I can think of a bunch of clients that cut way back and their percentage of soybean acres relative to their corn acres is significantly less. and they maybe didn't stay 50-50. There's less of those now. And I think it's been easier to sit on their hands and do nothing with the soybeans and sort of hope, right? Which is a strategy. It's maybe not the best one, but it's doing something. They're making a decision to do nothing on purpose. Um, what's your thoughts on the MFP again? Do you think there's a round two in this second administration, or any thoughts, any guesses?
Well, I think there's been a lot of discussion about that since, President Trump announced the first set of tariffs
Hmm.
as he entered office. The challenge for the administration, though, is finding the pot of funds to fund such a
Yeah,
program.
right.
And if you think back to President Trump's first term, if you will, the budget mechanism they used to create the MFPs back then, that's no longer available to them right now. And so the challenge, if you will, I think for the administration is I think they would like to do something, especially if, a lot of these tariffs or put another way, if a lot of these trade negotiations are not going well throughout this summer and the fall, I think you would see the Trump administration looking to do something for farmers. But like I say, the challenge is going to be funding it.
Mm-hmm.
One of the things I am watching right now actually would be the big, beautiful bill that's moving
Right.
through Congress right now. Within that, the House has at least laid out sort of an extension of the current farm bill, but strengthening up the effective reference prices in that, trying to provide some additional support now. But the timing of that support that could come from the big, beautiful bill would still be, let's call it, more delayed than I think farmers would care for.
Hmm.
So I think there still will be some need, if trade negotiations do not go as well as the president hopes, to create something like the MFP. But he's going to need congressional help
Yeah, for
to
sure.
get that where he didn't need that
Hmm.
back during his first term.
Yeah. It'll be interesting. It'll be interesting to see. I mean, how all the tariffs and like you said, the beautiful bill and all these other things bouncing around. Time we'll be a lot smarter in another 3 months. Let's put it that way.
Well,
Um,
no, well, I won't say we'll be a lot smarter, but hopefully we'll know some more.
yeah, we'll know.
Because in this case,
More informed.
yeah, the hardest part is everything seems to be shifting around underfoot. And so,
Hmm.
just like the markets have sort of been, as you say, sort of floundering around, sort of range bound right now, I think a lot of markets are that way right now because of just general uncertainty,
No.
not only in agriculture, but across the global economy.
Right. Right. Okay. Last thing. What do you want to leave producers with? Not only in this short week, but in the next couple of weeks as they go out and get their spraying done, get their extra nitrogen on, and the things that they need to do agronomically. What do they need to be thinking about from a market side?
Well, now that we've got it planted, I guess I'll turn it around and I think I'm going to fall back on what we talked about last time we met, Chris, and that is now is a good time to maybe put in some of those offers at, targeting that 470 range for corn. Go ahead and put in some offers that will make it worth your while to have that transaction in place. We can put those in now and, set a timeline between here and the 4th of July and hopefully let the market work for us as opposed to trying to watch the market and time it itself here. Because now is a time where, yeah, it's a busy time of year, just finished planting, likely going into spraying, but it's also a time when we, again, seasonally do see some better prices there. So let's try to take advantage if they occur again.
Yeah, for sure. Great comments, great perspective, and really appreciate you joining us again. And we'll definitely get you back as we become more informed here in the next month or so.
Be my pleasure.
All right. Thanks a lot, Chad. And again, and I'll really appreciate everybody on here. Appreciate Chad being on. And if anybody's got anything they want to have us be hitting on the AgView pitch, and also be checking out 19 minutes as well. And with that said, thanks a lot and have a great week ahead. And we'll catch you again next time on the AgView pitch.